Hey everyone, Couch Investor back to another video for today. So Amazon finally doing the right thing. Of course, it has taken some time, same thing with Meta as well. But Amazon is, well, going to cut some costs. So apparently in a broad cost cutting review, waste changes at Alexa and other unprofitable units. Review includes the devices unit, which includes Alexa, and where documents show operating losses of $5 billion annually in recent years. So we're going to talk about that in this video. I'm going to touch on a couple of important things with regards to Amazon. There's obviously the, let's say, unprofitable side of the business, which is the retail one, but it is still extremely important to the overall Amazon story. There's obviously the other side, the advertising, subscription, AWS, high margins. But Amazon being Amazon, in my opinion, you need both of them together. Of course, we've talked about the AWS potential spin-off in the next coming years. Who knows what might happen? But to me, Amazon without the retail is not really Amazon. Obviously, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up and subscribe if you have not. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So apparently Amazon's leadership is closely evaluating its Alexa business. According to some of the people, the business has more than 10,000 employees. I don't understand why, and is a major recipient of investment capital. Some of the people said 10,000 people working on the Alexa business, which is, well, has operating losses of more than $5 billion a year. Not good, not good at all. Now, apparently Amazon is considering whether it should focus on trying to add new capabilities to Alexa, but that would obviously mean more investment in that segment, and they can obviously see what type of functions people use Alexa for. And apparently they only use it for a specific, well, a few functions here. So why spend more money if nobody is really looking to use this device more and more for more functions? Now, that does not mean that nobody is using those devices. Actually, they have seen an increase in use of Alexa. So they say here that the customer interactions with Alexa in the past year have increased by more than 30%. And features like playing music are popular. Customers also regularly use Alexa for the other services, such as controlling their smart homes and shopping, and that the company continues to invest in introducing new Alexa experiences. But obviously, as we've said, they might not add that many new features because, well, they will be spending probably less money in that segment. Now, of course, that's not the only segment they're trying to cut costs. So that will also include its logistics arm responsible for delivering its packages. The company in recent months has put an added emphasis on finding ways to save money at its warehouses. People familiar with the matter said they've obviously invested quite a lot during the pandemic. And now, well, they probably regret a little bit. But when you talk about cutting your investment and then this pops up, so they revealed a new design for the Prime Air delivery drone, which is due 2024. I mean, I don't know where they're going to use this drone in the future. Right now, it's only in Lockford and College Station. Again, this is due 2024. I don't know. They're just throwing money at a project here. Let's see what happens with that. They're also debuting their new robot arm called Sparrow, which, yes, in the future could probably save them a lot of money in their warehouses. But now, if you're looking at solely the stock-based compensation expense, look at the huge increases there. I mean, the total one increased 75% year over year, with the majority of it coming from technology and content, 87% increase there year over year. So obviously those cost cuts are very, very welcome. Now, overall, as I said, this quarter was not bad at all. Of course, AWS now we're not growing 30% year over year. It was 27% year over year, but all the rest to me was quite okay. Advertising services, 25% increase year over year. Great. Subscription services, 9%. Third-party seller services, 18%. My view, as you know, I would love to see third-party seller services increase way more than the online stores. Online stores might decrease, I wouldn't mind, so long as third-party seller services increase. And now when it comes to Amazon, the overall business. So you have the retail part, you have the subscription part, you have the Amazon Web Services, Twitch, Prime, you name it, right? Why is it so important that the overall business exists together? Even though the retail one, very, very low margin, barely profitable, if profitable at all. Why is it so important to have all of it? For that, we're going to this great overview by Leandro, or Best Anchor Stock on Seeking Alpha, if you want to go follow him there. So he puts Amazon into different piles here. So first of all, you have the commerce one, then advertising, other, which is Alexa, Kindle, Amazon Echo, etc. And then obviously AWS in a league of their own. Now with commerce, you have physical stores, which Whole Foods, and then online stores, first party, third party. Then he mentioned this FaaS, which is fulfillment as a service. You have your buy with Prime. Now, the stars here are this exists thanks to lower margin investment in retail. The green arrows are close relationship. So commerce, close relationship with Prime. And Prime exists thanks to the investments in retail. Advertising, you have the marketplace, very close relationship with the third-party sellers here on Amazon, and this also exists thanks to retail. Then in advertising, you have obviously advertising in music, Amazon advertising, and on Twitch. And if we go down to the subscription side, which is obviously high margin there, so you have Prime Video, music, Whole Foods, Twitch, fast shipping, that's everything you're getting here with Prime, which again is great value. Other side, you have another subscription model, which is Kindle and also Audible, which again is great. Of course, the recent news right now with Amazon Music, the library there just opened up to hundreds of millions of people, might be competing a lot now with Spotify. Obviously, if you have some opinion on Amazon Music, do let me know down in the comments below. And then obviously AWS, again, AWS on its own is probably worth hundreds of billions of dollars as well. So imagine what would happen if you remove this part right here, right? If you remove the retail, then these other segments right here won't be as appealing to the customer, and also as a business, as an investment, won't be really as appealing. And that's why to me, it's very important to have this side here, to have the retail side. To me, is very important. It's crucial for the long-term success of the company. Of course, a spin-off of AWS might happen in the future, but all the rest here should stay together. Now, of course, these are just my opinions. Also, do share your thoughts down in the comments below. I'm extremely bullish on Amazon. It has become my second largest holding behind Tesla right now. Very long. This company been long actually for 4 years now. No planning on selling any shares anytime soon. And so if you enjoy this type of videos, let me know by hitting that thumbs up button, subscribe if you have not, and I'll see you all in the next one. Bye bye.